All right, everyone. Thanks very much for coming today. This is our live coverage of the non-farm payrolls for the May 4th, 2018. My name is Jasper Lawler. We're obviously representing London Capital Group here. Any questions whatsoever, shoot them through to the questions box. I'm hoping you can see the screen and hear me. Obviously, let me know if that's not the case. I'm going to jump through to the first slide here. So usual format, just what's the market looking for here? What's the background story? Trend of the data. Let's have a look at the charts, and then we'll go in for a live reaction, see what we make of it. So background story here. I mean, this is a kind of what makes this data interesting and what makes the reaction to it a little bit nuanced and different every time. Generally, when it comes to this data, you look at the headline number, 10% above and below the expectation. That's kind of where the underlying currency goes. In this case, the dollar, 10% below expectations. You expect the dollar to go down, 10% above, go up. But obviously, it's not always quite as simple as that. And increasingly, there's two sets of data for us to talk about. Now, when we actually look at the data expectations, I'll talk more about it. But I'm sure you're quite familiar that there's the headline jobs number, and then there's also the wage growth data, and both are becoming equally important. But again, what's the background here? The Fed's still set to raise rates gradually this year. So we had the Fed meeting last week, obviously. This week on Wednesday, and the general mood music from the Fed was that, of course, they didn't raise rates this time. But they seem pretty unperturbed by the fact that we've had quite a big jump in volatility in equity markets and bond markets. They're still set to raise rates at three times in total this year. Markets starting to think maybe it could be 4 times this year. And in this last statement which they issued, there was no press conference, but there's a statement, and the statement slightly changed the language a little bit to imply that they see inflation to hitting the target soon, whereas before the language was more along the lines of, well, it's close but not quite there yet. So a slight change, but that's all it takes. And one of the big factors I think that had been driving the dollar weakness was the fact that Trump was quite interestingly going against the tide of the status quo, which is saying that you want a strong dollar. That's who U.S. government officials historically say, we believe in a strong dollar and a strong currency that represents a strong country, kind of thing. But Trump has said, no, actually a weak dollar would be all right, because that's actually good for our trade balance, which is obviously we run a massive trade deficit right now. Hence the talks that are going on in China. It's not something I've mentioned here, but obviously it's a background bit of concern in the market that there's these US-China trade talks. But more recently, it's been a bit more nuanced from Trump. He did say something recently about, we're raising interest rates too much in Germany. They've got super low interest rates, something like that. And, that it's not fair. But for the most part, he's been actually intervening to say that he does support a strong dollar, so sort of towing the line a bit. In terms of economic data, the US economy has been surprising to the upside, and conversely, Europe and the UK have been missing expectations in terms of economic data. Now, part of that is just a natural outperformance of the US economy. Part of it is the expectations were lower for the US, and they were higher for Europe. So Europe's not met those high expectations for growth this year. US has exceeded those fairly minimal expectations. And obviously those expectations for the US are starting to grow now with the passage of the tax plan, etc. The dollar has, now getting into the territory of what we're all worried about, is that the dollar has broken out to the upside big time. So we've had a massive crash in the British pound. Euro's been pretty darn soft as well, and a nice breakout in dollar yen. So all those major currencies have been really great in terms of trend trading in the last couple of weeks. But they are facing some pretty major resistance when you talk about dollar yen, and some major support when you talk about cable and euro. You're actually almost probing through it, equally cable, so that will make this release extra interesting. Will today's NFP be the thing that actually tilts us over the edge in terms of these big levels that we're dealing with? Next on the list, I've kind of mentioned this already, but US Treasuries hit 3%. The reason they've been doing that and the reason the dollar's been stronger is that inflation expectations are rising in the US, whereas in Europe we had 1.2% inflation. So in that backdrop, the trend is higher in yields. That tends to mean, in particularly in US yields, that tends to correspond with a positive trend in the dollar. So again, 3%, a bit of a line in the sand for treasuries. We're facing resistance in the dollar. So again, these numbers could be part of the answer as to whether we break these levels. And then the other thing is that equities have been pretty subdued, I would say. I mean, I say subdued. There was like an 800-point range in the Dow yesterday, massive volatility, great for day trading. Not so great for, well, not so great for necessarily for swing or position trading. Definitely great for day trading. But they've been not so enthusiastic, even though earnings have been super impressive, and we're looking at 20% year-over-year earnings growth in the S&P 500 as a whole. But that said, we're not seeing any really big breakouts to the upside in US equities. The response, if you're looking to trade this event, the NFP, through Wall Street or through the US 500 or through the Tech 100. The response is often a bit nuanced. It's generally opposite to the dollar, but it's not always the case. So obviously it's not great for kind of bullish attitudes on the US economy if we see a really soft headline figure, and that is actually what we saw last month, if you remember. So let's move on to those expectations. This is what we're looking for this month. So if you look up here, we've got non-farm payrolls. That's the main figure we're looking at. 192,000 being the guesstimate here. 103,000 last time. So when you had such a big miss last time, it's hard to kind of sensibly gauge the next one. So there's a good chance that this one is off the mark. But basically, economists going for that sort of 200K range that they've been going for the best part of 2 years. Average earnings, 2.7% year over year, which is still above inflation. But it's not massive. And obviously the month figures tends to be what people watch. So that was the interesting divergence. Last time it was with the 103 main figure, with the 0.3 decent wage growth month over month. And this time we're looking for a bit of a switch up, improvement in the jobs, but slightly weak average hourly earnings. And then just as I mentioned, 200K has been kind of the benchmark. We had a huge February, a soft March. So the question now is obviously where does April fit? And economists basically saying, well, big, little, next one in the middle, which is basically 200. Obviously, and one thing to sort of say here is that the dollar's been on a really big run. So it's looking pretty overstretched. So if we do see a big miss here, which is possible, obviously, after having missed quite dramatically last month, then obviously that's 2 months in a row. You can't just say, oh, 1 month's data doesn't matter. You're starting to look at more of a trend when it's 2 months worth of data of weakness, and that could cause some serious rollover in the dollar. So that's actually something we almost want to look for if we're looking for some big moves in the dollar to the downside off this resistance levels. This is the average early earnings. Not too much to glean from this, to be honest. It always fits somewhere between that kind of 0.1, 0.4 range, really. Obviously, if it's 0.5, that's a big, out of the general range. If it's down at 0.1 or even negative territory, obviously that's that would become a focus because it kind of an extreme and it's outside that normal range. But we're looking right slap bang in the middle at 0.2 for expectations. Let's have a look at the LCG trader. We've got about 5 minutes now until the data comes out. So let's jump through to that. First looking at euro-dollar. So this is the daily chart. Backdrop here being that we're in the range. We've obviously slid big time here. We're below the 200-day moving average. We're also below these important peaks through here, which caused the big breakout to the top side. Once we got through them, we found initial support and then dropped through them. So the market definitely downtrending here. Next daily support, something to look out for if we do get another drop in the euro on this data, is down at 119.15 approximately. Anywhere from 19.15, you could call it at the closes, 19.35 you could argue as well, somewhere in that kind of 20 pip range, which is not a million miles away from where we've already paused. And then if I shoot down to the 1 hour chart, then you can see obviously we're in a downtrend here. So from my perspective, we're heading towards this big daily level down here, which could turn the trend around. But so far the trend is in place, and I wouldn't call this slight little uptrend in the lows here necessarily. That to me is not the making of an uptrend on this chart. This is clearly a downtrend at this point. But we've obviously got to look for what the market's been doing. We're kind of in a consolidation pattern here. So, if we get some nice data which is very negative or very positive, we could see pushes through this triangle pattern here. And first resistance at 2020 through these highs here. If this is one scenario, if the data is mixed, say for example, the headline figure is weak, but the wages data is strong, you could see an initial weak dollar, strong euro reaction, and then come into the resistance levels, and then the market rolls over. So try and judge what the data is and get your orders in as quickly as you can. And then these are the lows over here. Should the data prove more consistently strong, consistently weak, so a miss on the headline, miss on the wages, maybe the market pushes right up to these levels, and then you could think about going back in line with this kind of general weak trend in the euro. Switching gears to dollar yen, this is our 1 hour chart here, and you can obviously we're kind of running into these support levels down here. We're below those support levels. In fact, if we zoom out a bit, you can see we're already kind of breaking to the downside, quite interestingly, below the 200-hour moving average. So trend, interestingly, on the dollar yen chart looks a bit more encouraging in terms of dollar weakness than the euro does, I would say. The euro still looks very soft, yen looking a bit stronger. So that may determine whether you trade euro dollar or dollar yen in terms of the FX market, on depending on, if you look at it really, the way I'd interpret that is if you're looking at really weak US data, dollar yen looks probably the one to go for. If you're looking at if you're looking at better data, then probably some of these selling levels in euro dollar could be the one to follow the trend. So switching gears to gold, and we've got 1 minute to go here, so I'll bring the data onto the screen in case we miss it. Hopefully I've messed around with these data settings recently, so hopefully we're still going to see it. Let me load it up on another screen in case we don't. Whoop, okay. Okay, we're less than a minute to go here. Numbers almost coming out. We've got, maybe I should be zooming out to our longer term screens, unless people are particularly dedicated to gold. Gold, again, seeing a nice, oh, what we got? No, nothing yet. So we've hit the numbers. Is it coming up through my data screen? There we go. Okay, so let's deal with this. 3.9% unemployment. Wow, below the 4% mark. That is strong dollar. That's strong dollar. Okay, I've lost the data now. Oh, hold on, bear with me. Now we're on average earnings. Oh, a miss on average early earnings. Oh dear, 0.1%. That's disappointing. We're looking for 0.2%. We strong the unemployment rate, and what the actual private May payrolls 135k. That's a miss. Oh, that's just. Oh, but Feb revised to 324k. That's quite positive. But wow, that's disappointing on both wages and the main rate. Only that unemployment rate, which is actually quite a headline grabber at 3.9%. So it's interesting. We're seeing dollar weakness here. We're probing this triangle that we mentioned in euro dollar. Obviously, we're looking at potential breakout here. But I'm just wondering if this unemployment rate kind of takes over as something that people grab hold of, because it's not a mass. It's better than last month, 135k. Oh no, I'm looking at. Hold on, I'm looking at. What am I talking about here? I'm looking at March. Sorry, I'm talking about wrong data here. It's 168k. It's still a miss, but it's not quite as bad a miss. And see, we're rolling off the top of that triangle. I think that it's only a small miss. Earnings pretty soft. What are stocks doing? Let's have a look at Wall Street. We're on the hourly chart here. We're popping high on Wall Street. I think stock markets like that the unemployment rate has dropped, and that average yearly earnings are not an inflation concern. This looks to me stock positive. And look at this big ramp up we had before the data. What we're eyeing now is a potential flag pattern here off the lows. Let's, if I can just put a shape in here. This being the flag pattern, obviously. Push higher, that's the pole. Here's the flag. We're looking for the pole to the top side. We're not really there anywhere close to it yet, but potentially setting up for some decent moves here in Wall Street. And look at that. Look at yesterday's daily candle where we had a massive drop to the downside. Like I mentioned, there was like a 800 point range in the dot. So we dropped like 400 points, came back to the top side, finished positive after a big down day. That's the 200-day moving average. And we've just had unemployment rate of 3.9%. So I don't know. I'm sure Bloomberg will tell us straight away how long it's been, but over a decade since maybe 20-year low in the unemployment rate, 3.9%. So we'll have to see what happens here. We could be setting up, obviously we're an hour before the open on Wall Street, but the good thing about trading with LCG, we can trade pre-market on Wall Street. So if we saw a pile of trading coming in at the open in America, then it's going to push this market to the top side. Gold, interestingly, is pushing higher. Is the euro still pushing higher as well? No, look, euro off its highs from that triangle pattern. Dollar yen is rolling over to the downside. Interesting. So we're getting some haven flows with the yen and the gold strengthening. Euro not quite so encouraging. Gold barely off its highs. Dollar yen barely off its lows. Well, gold looks tricky at the moment, to be honest, on the short-term basis. You know, we've got a little pop through that high here. Generally speaking, in gold, we've bounced off the bottom of a long-term range. So this is the daily chart. We obviously come off this range here and the 200-day moving average. So, you know, if we're interpreting the data as good, it's hard to really see how gold can sustain itself. Obviously, we've had a miss on the headline number, but that unemployment rate and the average hourly earnings were a bit disappointing. Let's have a look at cable. That's a very good point, David. I'll pull up cable because obviously we're sitting right at that 200-day moving average on cable. We had a doji yesterday. Let's chuck in that to set up my normal template. Well, we are through the 200-day moving average, but we are still in the vicinity of significant potential form of resistance, turn to support. What are we at? 135.50. A shade above 135 is obviously the round number. Where's that come in? Yeah, you know, thing is, the trend is very much down in cable, but we'll have to see how this materializes. How have we been react? So you can see we've been struggling to make much downside progress. Here we got down to the sort of 136s. You can see the market tried to rally from 136. We've been probing lower since, no real obvious sign of reversal, but we're just above 135, which is obviously a big number that institutions look at. Institutions look like they've been buying into these drops ahead of 135. And now as retail traders, what we want to look at is for signs that actually that buying is translating into a trend reversal. It's not really there yet, to be quite honest, but if we get a decent positive candle over the next 4 hours, then this will be increasingly something quite interesting. I still wouldn't be buying cable yet. That's just my personal preference because the trend is so clearly down on these short-term charts. But certainly be interesting to see if we get a little pop to the top side after this data. If this dollar weakness from this missed headline, missed wages follows through. I'm just intrigued by that unemployment rate. I just wonder if that's going to be a focus. Oops, that's interesting. Stocks rolling over from there. It does look like the general take on this is it's been a bit disappointing data-wise. Obviously, what's gold doing on the shorter term chart? Gold it's holding its gains. The dollar holding its weakness. Particularly, look at dollar yen really tipping to the downside now. So look, if you judge on dollar yen, look at that. We're really taking off now. Didn't I tell you that dollar yen looks weaker than euro dollar looks stronger? And if we get soft data, dollar yen is the one to trade. Exactly what I just said. And then we're seeing that materialize. Now, dollar yen tipping off big time because that trend had reversed, whereas the trend was still quite down in euro dollar. So it wasn't so sensible to buy euro on this soft data. It was better to sell dollar yen. There you go. All right, chaps, I'm going to call it a day here. Let's say it'll be very interesting to see how this market pans out. Some interesting data for sure. 3.9% unemployment rate. Not normally the number that the market focuses on, but just it will be something certainly that you see in newspapers in the US, and probably something Donald Trump will be tweeting about if he hasn't done so already. All right, guys, have a good one. Jasper signing out.